Hey, this is Jerry here, and on today's video, I'm going to give you some tools and strategies to be successful in today's crazy market. And what I mean is the usual rules do not apply. Whether you're buying or selling, the usual rules do not apply. By the end of the video, buyers will have some tools to help get their offers accepted, and sellers will have a strategy where they can get the absolute best contract, not simply accept the first highest offer. Now for buyers, I want to give you 3 tips that'll help you get your offer accepted and a strategy that does not necessarily involve only throwing more money at the property. First, I want to tell you about escalation clauses. Second, I want to tell you about the power of 2 magic letters. And third, I want to talk to you about taking uncertainty for the seller out of the contract that you don't need to have in there. All right, escalation clause is a tool by which you agree to increase your offer should the seller present you with any other verifiable offers. They have a cap on them, so you can't go too high. You might say, I'll go $2,000 over your highest verified offer, up to $323,000, okay? What they allow you to do is to show that the seller that you're willing to spend more money, but you're not putting it all on the table at once. And the seller has to provide you with the verifiable contracts, and then you have to provide them with more money. It's a way to not offer up all your money at once if all your money at once isn't needed. Now I want to talk about the magic of 2 letters. And when I say 2 letters, what I mean are letters to the seller. I think you've all heard at this point about how you should write a personal letter to the seller, and that's true, but you need 2 letters, one from me and one from you, and they have to be written correctly. Otherwise, they give you the illusion of hope without having any real impact on the transaction. First is the letter that I need to write. And the letter that I need to write is a quick summary of all the good financial reasons that the seller should accept your offer. A lot of what's important to the seller is scattered throughout different parts of the contract. And we don't want to rely on the seller's agent doing his job correctly or her job correctly and making sure that they understand the benefits. So I put them all on one page that can't be missed. Now the second part that has to be done right is your letter to the seller. You've all heard about this, but there's a formula for this. The first part of the letter has to talk about how much you like the house and maybe compliment what the sellers have done with the house. There's 2 reasons for this. 1, everybody likes a compliment. 2, when you write a letter that talks about the specific features of this property that you like, okay, it shows them that it's not just something that you're photocopying and dumping in an envelope. When you talk about the special features of the property, they know that you're talking about their home. And then after that, you go into whatever parts of your personal story might have an impact on the sellers. The third part of the strategy that involves getting your contract accepted without necessarily throwing money at it is to remove things in the contract that are a risk to the seller, but no real benefit to you. The most usual one is the loan contingency, okay? If you lose your loan late in the game, they have to give you back your earnest money, and then you get to walk away from the contract. Well, in this market, you should be sure that you're going to get your loan, and you should be willing, after a short period of time, to let that earnest money be non-refundable should you lose your loan. A second thing you can do is, if you have the money, you can make it not contingent upon appraisal. If you've got enough down payment, you can do that. You may not want to do that, but some houses are selling at above appraised value. So if it's a house you really want, it's something that you can at least consider, and we can go over how to make sure that you don't pay too much for the house, even though you pay more than appraisal. So what sellers should be doing today is to try and go for the perfect contract, not just a good one. add some things into the contract that will make it more certain that the contract closes, and anything else you want to throw in that isn't normally in the contract but will help make your life easier, it's now possible to do. So a tool that I want sellers to use to make the perfect contract is what we call making multiple counteroffers. That is, if you have several people making an offer on your home, you can make counteroffers to all those buyers, and the counteroffers do not need to be the same to each buyer. And in fact, if two of the buyers accept your counteroffer, you can still pick whichever one you want. So it puts you in the driver's seat when multiple people want your house, and you should write an offer that makes you as happy as you possibly can. When it comes to adding certainty that the contract will close, you now have the ability to take some of the boilerplate things out of the contract. Remember, almost everything in the contract is negotiable, so long as it's legal, okay? And those boilerplate items that are there are meant for the usual times. But remember, these are not the usual times. So the way that you can make today's rules work for you are: one, you can remove the appraisal contingency. I know that sounds strange to some people that think it's a law that the house has to appraise. It's not a law, but it is a part of the contract. And if buyers have enough money, they can waive the appraisal. The second thing you can do is to make the buyer's earnest money go non-refundable at some point in the contract, not close to the end. Okay? If the buyers are uncertain that they're going to get their loan, in this market, there's no reason for you to be waiting to make sure that that is going to happen. Put the risk of the buyer not getting his loan on the buyer. If the buyer is going to forfeit some earnest money because they don't get final loan approval, they'll be certain to get final loan approval. And remember, you've got more than one buyer out there, so you can select the folks that are willing to give you a financial commitment to finishing the contract, not just a promise that they're going to try. Making your life a little easier. Maybe you don't want to move out of the house the day that it closes. There could be a situation where it's hard to get all the moving situations lined up on the day that it's supposed to close. It could be that you really need to have all your cash in hand before you actually move out of the property to make your next move go smoothly. In this market, you can negotiate that you get to stay in the house for some short period of time after it closes. If the buyers don't need to move in right away, maybe they're in a rental that doesn't close for 2 weeks after they purchase your home, they can give you the opportunity to stay there for a day or two. And sometimes just a little bit of time on having flexibility will make your transaction so much less stressful. And if buyers can give it to you, they probably would be willing. Again, it's knowing the details and knowing how to do the paperwork that makes any of these tools work correctly. And I've been doing this a long time, and I can make them work correctly for you. So I hope whether you're buying or selling, you'll give me a call and we can talk about your special situation in these crazy times.